Ashwini Agarwal is with us, founder and partner at Demeter Advisors. Ashwini, good to have you with us here. Thanks very much for your time. So, from the last time we spoke, and I think the market's it's moved from one end to the, it's not a very large trading band, but from the lower end, we've kind of moved to the upper end. Does the band still hold, and will we kind of continue to move within this, up and down a little bit? But single stocks, of course, we've seen very large moves in 2025 as well, even as the Nifty is only up about 1% YTD. What are your thoughts, Ashwini?
Morning, Prashant. Good to see you again. My sense, as I said, last time when we met, is that we are stuck in a narrow band. We need some time correction because valuations are expensive. And on an aggregate basis, Nifty doesn't really have a lot of room to move beyond this 24,000 to 26,000 range. I continue to be in that frame of mind, but I'll make two corrections. One is, I think the government's response to the higher tariffs from the US by way of cuts in GST rates and rationalizing of the GST rate table is actually a very big positive. And I am hoping to see a significant revival in demand as the year progresses. Addition to that is that liquidity conditions are reasonably benign, and especially in the microfinance area and unsecured credit, where there were significant brakes applied in the calendar 24, you should start to see more easing up of credit. So, you take the two together, and I think second half of financial 26 might see some revival in consumer demand. And that, to me, is actually a positive on the overlay that we had spoken about the last time. Coupled with that, we have the US trade representative in India today. There are hopes that India will revert to a lower tariff of about 20 to 25%, as opposed to 50% that's being levied right now with the US as the year progresses. And if that happens, that will give the market another leg up. The question that I'm struggling with is that we are seeing a huge amount of paper supply via IPOs, offer for sales, and promoter sell downs. And there are no foreign flows at all. So the domestic market, which is reasonably price agnostic in its approach, is absorbing all the paper. Can this last, and how long can this last? That's the question that I'm thinking about.
It's a very valid question. We all wonder, Ashwini, but I guess at last still retail investors give mutual funds 30,000 crores every month. That's just in SIPs. The overall numbers have been even better, between 35 and 40,000 crores. So let's see, and fingers crossed on that. But, while we are obviously talking about the market being very sideways, I was looking at some large cap names. Forget mid caps and small caps. I mean, Maruti is up 40% this calendar year. So who is to say that we are in a sideways market, right? And even the other one, look at Eicher. Eicher is up 42%. And these are large cap names. So let me start right there with the change, the pivot that the market has made on some of these beaten down auto names. Do you think they've run their course, and a lot of the excitement and the GST cuts, the festive turnaround, is that already in the price, or are they good for more?
Survi, great question. I think, just stepping back a little bit, I think these opportunities on a bottom-up basis among the large caps and more so in the mid and small cap space will continue. I mean, there are pockets of the market where you'll see exuberance and pockets of the market where you see complete despondence. And in a sideways market, that's the play. That you move from areas of exuberance to areas of underperformance, and that's where some bottom-up money can be made. The auto stocks have obviously run up significantly. Valuations are now looking punchy to me, but who knows? If the car sales numbers and two-wheeler sales numbers pick up meaningfully once the lower GST duty kicks in on 22nd of September. Then the momentum can take these stocks further. That's very difficult to determine. But on valuations basis, there is not much room. There is my personal opinion. I see opportunity in banking names. I'd mentioned in my opening remarks that easier liquidity and growth are both looking positive. So I think the entire banking and finance space, especially the NBFCs and more so the microfinance space, is one area where I see some rich pickings. I also see an opportunity to buy some of the beaten down exporters because I do think that a thaw in the U.S.-India conversation, gives me hope that lower duties will be put into place. Maybe not immediately, maybe in a few months' time, and that I think is another opportunity. And likewise, there are several bottom-up opportunities both in the large cap and in the mid and small cap area, which offer attractive pickings in a market which moves sideways and goes nowhere. As I'd mentioned to Prashant, I think in my previous conversation, if you go back and look at the market from 1993 to 2003, the index really went nowhere. And yet there were plenty of stocks where you made a lot of money if you chose to back the right names. And I think it's that going to be all over again.
93 to 2003, Ashwini, you're scaring us. Now, we hope it's not a lost decade, at an index level. But yeah, take your larger point that till the index starts moving and galloping ahead, we need to keep the head down and look for specific stock opportunities. But yeah, imagine that. One whole decade of sideways markets.
But Ashwini, it's already been about 13 months since we hit our all-time high levels last year. So to your mind, if you have to make an assessment, how long will this phase of consolidation continue at the headline level?
Okay, so like Surbhi said, even I hope it's not going to be a decade, maybe a couple of years. But I think, you need to see the valuations see a little bit of time correction. I think while valuations in India for the Nifty 50 are, not at their peak and they are more or less in line with 5-year averages and probably slightly above their longer term averages, I think the problem is growth needs to pick up. I think I find it particularly hard to explain as to why 21 or 22 times earnings is reasonable for an environment where earnings are growing at 10 or 11%. We need earnings to bump up to at least 15, 16% for valuations to sustain. And if they don't, then I think you need another year and a half of the Nifty going nowhere for the valuations to come to maybe around 18 and a half times earnings where they start to look reasonable. Now, that's just arithmetic is what I'm proposing to you. But what can happen is that if consumption demand rebounds in a big way, and if the government pushes ahead with more reform, including some privatization, and that brings back foreign direct investment and foreign portfolio investment, then all bets are off. Then you could look at a much higher Nifty in even a shorter period of time. So what I'm trying to say is that I'm not that negative. I think on the balance, I'm a bit more positively biased.
That's good to know. But on this point of growth, Ashwini, I'm glad you raised it because I was looking at some data from the NSE just yesterday. It's hindsight data, but sometimes the numbers just hit you so hard, right? So for the Nifty 500 universe, at the end of the first quarter, the top line growth is about 5.9%.
That's right.
The PAT growth is about 13.2%. And we know this has been the trend, right? When your top line growth is anemic, it's in single digits, margins have swollen, PAT is better. And I was having this debate earlier with my co-host yesterday itself that we love to put the ball in the RBI's court or in the government's court, but at a philosophical level, doesn't something need to change with India Inc. as well? Because growth is simply not coming by. And what happened? 1.4 billion consuming people. How is it that we're growing? Companies are growing at an aggregate level of 6-7%.
No, I think it's a combination of demand being subdued because of lack of credit availability and over leverage at the household sector. I think that's what has hit demand. And I think at a macro level, my personal feeling is that tariffs in India are very high. And that protects the domestic industry to a point that we don't bring prices down. We don't offer the consumer the surplus that he needs to be able to consume more. I really hope that the government starts looking at tariffs on a serious basis and figure out where we need them and where we don't. I think the reason why India lags the global case studies like Japan or Korea or Taiwan or even China is that we protected the industry far too long, and that hasn't allowed us to build the competitive intensity that we needed to scale up. I mean, guess where I think the industry competes the best? It's IT services, it's financial services, and there is no protection. I mean, in the sense that you compete with the best in the world to win the business that you do. But in manufacturing, I think significant amount of tariff controls need to be taken down. That's my belief. That's so. So let me put it out there.
Yeah. The earlier point about, I think, the credit, I think credit is, put differently, the financial institutions are not stressed, but maybe their borrowers are a little stressed, right? Ashwini, and that's sometimes what we hear. You are intimately familiar with the textiles business, and I think you sit on the boards of one of them. And with what's happening now, Ashwini, and this was a segment which was hard hit because against expectations, things went completely south. But hopefully it'll get resolved. Do you think these are good levels to look at some of these businesses?
I mean, stock-wise, I don't want to make any comments, but I think generally speaking, I have this investment belief that, whenever there is a cloud over a certain company or a certain sector, and, if you can build a thesis around why that cloud will lift, that's usually a good investment opportunity. Now, obviously the market expectations around tariffs have also evolved over the last week or 10 days, ever since, those comments between President Trump and Prime Minister Modi were exchanged, and some of the stocks have reacted. So one has to look at valuations and take a call. But I do think that the pessimism will probably fade as we go along. I'll leave it at that.
Yeah. So I think that answer is clear, but you've got to build the case, right? It'll get solved and it'll get resolved. And it has to, I mean, at a broader level, can't be 50. But does 25, a base of 25 make sense? And while these competitive at that rate? And so that's another question. But business by business in that sense. Just a couple of other names I want to highlight before we go any further. There's Sri Pushpak, which is taking off vertically, right? So day before yesterday, Friday's close was 330. Stocks at about 430 now. It'll come up on your screens. So it doesn't come up in the top volume-led gainers list, but it is. That is Sri Pushpak. It's the third largest volume-led gainer on the NSE across the board. Number 2 is Segachi. Number 1 is Anantraj. But those are much smaller price gains, 2% and 3% gains. NTPC Green is another one, which is coming up with about a 3 1/3% gain. So it was not there when we started, but now in the mix. Reddington is up about 5% or so. And GMR Power, we discussed earlier, 2% on GMR Power after yesterday's sharp move in the green. Indocount is coming up with that's a textile name, 9% on Indocount, 305. KPR Mills is up about 6.5%. We were talking about this pack with Ashwini on the textiles front. So you got two of these names with some of the largest volumes right now and decent price gains as well. What else? I mean, JK Cement, there's Walkhard, Medanta is up about 3%. These are all Cross, that is KROSS, which is up about 4% or so. So, enough and more names which are starting the day in the positive. 4:1 is the advances to decline ratio at this point. By the way, the largest loser is the largest volume-led decline is BSE. BSE is down about 1.6%, 1.7%. So about almost a million shares, nearing a million shares in terms of volumes. And the other one is Ixigo. I highlighted this around the same time yesterday as well as a very large volume-led loser. It ended down about 6%. It's down another 6%, Ixigo. But, context is important. Even with the 12% knock last 2 days, stocks up 60% YTD. So high this year is 330. It's down to about 270 odd rupees or so as we look at things. Ashwini, and these travel names, any thoughts? Ixigo, of course, is the newer lot, but there are so many others, right? As a theme?
I think travel, entertainment related consumption will continue to do extremely well in India. I mean, I think hotel companies, hotel rates are crazy. I was going to be in Bangalore and looking at hotels, and there's nothing available for less than 35,000 rupees a night. Similarly, in Delhi, any decent accommodation, is 25,000 rupees plus. So I think hotel stocks, generally speaking, will continue to do well, and so will travel and the airline duopoly story. Of course, we all know. So I think travel-related consumption will continue to do well. I think there are stocks out there which will look very interesting to me. Unfortunately, you can't discuss names, but yes, that's a place I'm looking at.
Okay, all right. So travel, tourism, some exporters. So we've got some clues, some ideas there. Thank you so much, Ashwini, for joining in. Good conversation, and we look forward to the next one.